Man, what it do, YouTube? It's Kendall, and today I'm gonna be schooling you guys about what credit versus debit is and how to use credit the right way, right? And first off, you want to make sure. Well, actually, let me say this. First off, I'm not a financial advisor. I'm not any type of finance bro or anything. I'm just your typical average engineering student, 19-year-old engineering student in college, man. So, but I'm just gonna put you guys on to some game that I learned over the years, and make sure you guys don't make the mistakes that I made, right? So, yeah. So today I'm gonna be dropping a free game video on credit versus debit and how to use credit the right way. So a lot of us we were taught that credit cards were bad. I know that none of my parents wanted. My mom didn't want me to get a credit card, and my dad didn't want me to get a credit card when I wanted one at 17. But what you got to understand is that your parents grew up in an age where these banks would literally go to college campuses and they would scam them. Well, not scam them, but they would get them to sign up for something they didn't really understand, right? So these banks would go to these college campuses, sign students up for credit cards, knowing good and well they didn't know how to use the credit card the right way. So what they did was they got themselves in crazy debt, right? And half of it is because your parents don't want you to get into debt. They don't know that how responsible you are with money yet, right? So, and that's what I'm saying. You want to make sure that you're responsible with your money. I can make a YouTube video about keeping track of your finances, and it's probably gonna be one of my next YouTube videos, but I can't get into that right now. But you want to make sure that you're responsible with your money. Make sure you pay your bills on time, right? So once you're responsible with your money, now it's time to build, right? So first off, what is a debit card? So most of you guys have a debit card already, right? And what you got to understand about a debit card is that it's your money, right? So at some point, your mom, whatever, your dad, or maybe it was you guys, one of you guys decided to go to a bank or a credit union and get a debit card, right? And what a debit card is that you're using your own money. So that means at some point you linked it to your checking, the savings account, whichever one, probably your checking, and you're basically spending your own bread, right? You're not getting any money back. You're just spending your own bread. And there's nothing wrong with the debit card. There's absolutely nothing wrong with the debit card. I started off with the debit card, right? Because that's how you build trust with these banks and credit unions and all that stuff. That's how you increase your score. So you want to make sure you're not going overdrafted. You want to make sure that you're not going below zero. Don't go into the negatives. Make sure that you at least have some money in your account. Or if you're with the bank, don't go under the limit, right? Usually some of these banks have limits. I mean, I don't recommend you guys do Wells Fargo or nothing. Choose an online bank. But I can also make a YouTube video about, good banks and stuff. But also, yeah, you want to make sure that you're paying on, you don't go into the negatives, right? You want to make sure you're responsible with your money, because that's how you build initial trust, right? So when you're ready, now it's time to upgrade to a credit card. And you may be asking yourself, you may be asking your brain, what is a credit card? Well, I'm here to explain what a credit card is. So what you got to understand about a credit card is that first off, it is not your money. Not your money. So a lot of people get credit. A lot of people confuse credit with it's just not their money, and they go absolutely insane. You do not want to do that. Twin, credit is the bank's money. That means that you eventually have to owe it back, right? So if I give you my money, I'm gonna be expecting the full FULL amount back, right? So I'm gonna be wanting the amount in full back. Whatever you owe me, I want it back eventually. I don't care how long it takes. But understand that if it's past the due date, I'm going to charge you interest, right? And usually these due dates are after every month, right? So, but why do people get credit cards in the first place? So people get credit cards in the first place because it can build their credit. It can build your credit, and you get some type of incentive, right? So if a lot of these credit cards, they offer cash back. They offer cash back. And it can be cash back on dining, it can be cash back on groceries, and eventually once you get into the more advanced credit cards, you can get points, and these points unlock better rewards. Like you can get maybe a free 1 to 3 nights at a hotel for free. You can get some money off your plane ticket, or you can get a damn near free flight. it depends on what type of credit card it is. But what you got to understand first is that this is not your money. You got to owe the amount in full. You got to pay back the amount in full every month. And why do I say full, right? So what a lot of these credit card companies do is they have something called a minimum payment. Minimum payment. So a lot of these credit card, this is the trap that most Americans fall for, is that the minimum payment is very tempting. So let's say I get a credit card, right? I get a secured credit card, and you may be asking yourself, what is a secured credit card? I'm going to explain it to you in a second, but let's just say I have a secured credit card, right? And I have a credit limit of $200. So I spend all the $200, which is what you don't want to do. You want to keep your usage under 30%, which is what I'm about to explain that in a second. But let's just say I spent the whole $200, right? That means I owe back $200, but I have a minimum payment of $20. So that minimum payment is obviously very tempting. So I pay the minimum payment of $20, right? That means I owe $180 back at some point, which is at some point, right? I owe $180 back. So what they're gonna do is they're gonna charge you something called interest, right? So you didn't pay the full amount back. You paid the minimum payment, but I still owe $180 back. And this is the trap, right? They charge interest on that $180. So after a couple months go by, it's gonna turn to $185, $190, $195, and now I owe more than what I started with, right? I owe more. That means I'm losing money, right? And it doesn't help increase your credit score at all. And this is, like I said, this is the trap that most Americans fall for. And the reason why I say you want to keep your usage under 30%, let's see, under 30%, right? So the reason why I say you want to keep your usage under 30% is because you got to think like a bank, right? So if I'm the bank and I loan you my money, right? I loan you my money, and you spend all the money, all the credit limit, right? All the credit limit. I'm gonna be thinking that you're kind of irresponsible. You may pay it in full, right? But I'm gonna be thinking like, damn, you need this money. Like we talked about needed energy. I talked about needed energy in one of my other YouTube videos, man. It's universal. It's not just girls, bro. But look, now you want to keep your usage under 30% because you don't want to seem like you just need the money, right? So keeping your usage under 30% is always going to increase your score, have a better increase on your credit score, right? So, and you may be asking what a good credit score can do. A good credit score, twin, it can do a lot of things for you. You can get better rates on loans. You can get better rates on mortgages. You can get better credit cards with better credit score, right? So a good credit score is very useful in this society. This is why you don't want to wreck it. You don't want to get high rates on loans. You don't want to get a high rate on your mortgage. You don't want to get a high rate on your car loan. You don't want that. I promise you don't want that, twin. So what I'm saying is you want to keep your usage under 30% because you don't want to seem like you just need this money, right? So that means if your credit limit is $200, that means you want to maybe just buy a candy bar, maybe buy a soda from the grocery store or something. Buy something small. Don't buy a whole lot with this credit card starting out, right? Because you're trying to build your credit, right? So you don't want to seem like you're just dependent on this money because it's very, it doesn't look right. It doesn't really look good, right? You want to always keep your usage under 30% when you're first starting out. And really, with the credit card that I recommend starting out, I recommend you guys get a secure credit card. So a secure credit card, all it is that instead of using the bank's money, you're using your own money. And you may be a little bit confused by that. So I'm going to explain it to you. So here, we're right on the board. Secure. Can you guys see that? I hope you guys can see that. Hold up. Nah, the glare. Damn. Hold up. secured credit card, right, is that you're using your own money. So the bank is gonna ask you to use your own money. So you may send in $200. You may send in $500, whatever your credit limit you want to be. I recommend starting out with maybe $200, but you're using your own money. So it still works like a credit card. You're still building your credit, but you're using your own money. So your bank doesn't really lose money if you don't pay it back. You're more so losing your own money, right? But what a secure credit card is that it's more secure, right? So it's easier to build credit, and it's safer for you, right? Because you're not using the bank's money. And eventually, after about anywhere from 6 to 8 months, you should be able to upgrade. They should send in another credit card, which is unsecured with a higher credit limit, right? And they're gonna give you the $200, $500 back what you started out with, right? I mean, it's a credit card, but all it is that you're using your own money instead of the bank's money. So that's why I recommend you start out with a secured credit card, right? But anyways, though, that's the end of the video today. I hope I made credit versus debit simpler and why credit is always over debit. I hope I made it simpler for you guys. But anyways, though, I'm gonna get back to studying, and I hope everybody have a blessed day, bro. Thank you guys for watching the YouTube video. Make sure you like, comment, and subscribe.